Hey everyone, and today we are going to talk about two interesting companies that are quietly making big moves in their industries. The first one is the Global Water Solutions Company, and it just bagged a massive 2,332 crores project in Saudi Arabia. And the second company is from the liquor space, and it just made a bold move where it acquired Imperial Blue brand from Pernod Ricard, one of the most recognized names in the whiskey market. So basically, both the companies are expanding steadily, one through international project wins and the other one by scaling its product portfolio and deepening the market reach. So welcome to another episode of Noisemaker, where we keep things simple and talk about companies that may not always be in the spotlight but have a strong growth potential. I'm Saizal Agarwal, Equity Research Analyst at Desvelado Advisory, and today we'll be talking about two companies that are making solid progress in their business, and if the current trends remain intact, they might continue to grow even further. But before we begin, let's have a quick look at the disclaimer. So, any discussions, facts, or writings provided here are for informational purposes only and do not constitute any buy or sell recommendation. So, please conduct your own due diligence before making any investment decision. Now, let's move to the first company. So, Tech Wabag Ltd is a global player in water treatment solutions, and its role is critical because the company designs, builds, installs, and runs the plant that clean the drinking water, treat wastewater, purify industrial water, and even remove the salt from seawater through desalination. And recently, the company secured a massive 2,332 crores project from the Saudi Water Authority to build a 300 MLD seawater desalination plant at Yanbu. And this single deal adds 17% to the FY25 order book, which now stands at around rupees 13,700 crores, giving them visibility for execution and billing for the next 2 to 3 years. So, what's really driving all this growth for Tech Wabag? And can they keep this momentum going in such a competitive space? So for this, Nishant will be joining in for more.
Uh, Thanks, Sizzle. Honestly, what makes this order even more exciting is the region. Saudi Arabia is pushing infrastructure big time under Vision 2030, and Wayback is right in the middle of that wave. They have been focusing on large scale, high rated projects across the Middle East, and this deal helps them maintain an order book that's 3 to 4x their annual revenue, which is a solid cushion for their future growth.
Absolutely. But it's not just about big projects. I think the company is also targeting 15 to 20% revenue growth rate, and they are increasing the share of operations and maintenance contracts to 20% of their total revenue. And that's a smart move because O&M brings steady cash flow and reduce the dependency on just one-time projects. Also, this deal also aligns with the aim to win 300 to 400 million worth of orders annually from the Gulf. And if this execution stays on track, it can even support margin expansion, keep ROC above 20%, and help them to stay net cash positive.
Yeah, and now let's talk about the company's financials, and they have been solid. In FY25, revenue grew 15.3% year on year from rupees 2856 crore to rupees 3294 crore, but Q4 was the real highlight. Rupees 1156 crore revenue, their highest ever and up 42.6% sequentially. Talking about the EBITDA for the year, which is currently stood at rupees 430 crore with margins stable at 13.1%. Talking about the net profit, that also rose to rupees 294.8 crore compared to rupees 250.4 crore last year. And net margins slightly improved to 8.8%, showing consistent profitability and execution strength.
Exactly. And also, they are looking ahead. The company is planning to expand into new regions like UAE, Kuwait, Jordan, Morocco, Uzbekistan, and Kazakhstan, which is a move that could even reduce their over reliance on a few markets and open the new revenue channels. And I think there is a really smart part that they are setting up a joint venture with Norfund, which will also help them to fund municipal water projects without stressing their balance sheet. And with this asset light model, they can even bid for more projects without taking in on much debt.
Yeah, and to sum it up, Webag is hitting the right notes: big wins in high growth regions, stable core margins, a move toward more recurring revenue, and smart capital allocation through JVs and asset light models. And if they can keep up this momentum and execute well, Webag could be in a strong position for its next growth phase.
Right, Nishant. So now let's move to the second company, Tilaknagar Industries. And this company is best known for making and selling Indian made foreign liquor like brandy, rum, and it's now increasingly making whiskey. And the big news is that they have acquired the Imperial Blue business from Pernod Ricard India for euro 412.6 million, and that's about 4150 crores. Now, this includes a deferred payment of 282 crores to be paid after 4 years, and they are funding the deal through 6500 crores capital raise, out of which 2500 crores from equity and 400 crores through debt. So, Nishant, what's your take on this?
Uh, well, that's a bold move. With this acquisition, Tilaknagar is stepping beyond its traditional strength in brandy and entering the much larger whiskey segment. And here is why that matters. Whiskey makes up more than 60% of India's IMFL market, and Imperial Blue is already the third largest whiskey brand in the country. So, this gives Tilaknagar immediate scale and a strong foothold in a high volume category, something that would have been taken years to build from scratch.
Exactly. And post acquisition, their total volumes are also expected to jump to 34 million cases annually. And that's a huge leap. They'll also expand their reach towards North, East, and West India, where Imperial Blue is already strong. And over time, the company expects to benefit from the cost synergies, better distribution, and a broader product mix, which could support margin expansion and future growth as well.
Yes, and so if we take look at the company's financials, in Alpha 25, revenue from operations rose 7.3% year on year from 2958 crore to 3175 crore. In Q4 Alpha 25, revenue came in at rupees 881 crore, up 9.4% sequentially. EBITDA, on the other hand, grew from 185 crore to rupees 225 crore, with margins improving sharply from 13.3% to 17.8%, thanks to operating efficiency. Net profit surged to 230 crore compared to rupees 138 crore in FY24, and net margins improved to 7.2%. Those margin improvements are very encouraging, and it shows that they are not just growing in size but also becoming very efficient. Now, looking ahead, the company is very cautious with finances. They have set a clear target to bring net debt to EBITDA below 1x by FY29. Right now, they already have 107 crore rupees net cash, so they are entering this expansion phase from a position of strength. This gives them the flexibility to continue expanding their product range and capacity without putting too much pressure on their balance sheet.
So, Nishant, I think I can say that when we zoom out, Tilaknagar is going through a serious transformation. From being mostly a branded focused player in South India, they are now becoming a pan India spirits company with a strong whiskey portfolio and a broader distribution network and solid financial discipline.
Yes, and this shift towards premiumization, backed by a well known brand like Imperial Blue, is the kind of leap that can redefine the company's future. If they execute this well, managing costs, integrating operations, and maintaining market share, Telanganagar could emerge as a much bigger player in the Indian liquor market over the next few years.
So, thanks a lot, Nishant. That really helped us understand the direction both these companies are moving in. So, now let's take a quick look at how some of our previous picks have performed. So first we have Gabriel India Limited, which we picked up at 842 rupees, which is now trading at 1010, giving a return of 19.9%. Ahluwalia Contracts India Limited from 999 to 1072. That's a gain of around 7.4%. Then Late Revenue Technology Limited, which moved from 178.6 to 220.9, delivering a solid 23.7% return. Oren Infra Solutions Limited, it was from 1413 rupees to now standing at rupees 1455.8, which is up by 3%. And finally, DEE Development Engineers Limited, this one saw a slight dip from 318 to 300.3, which is a 5.6% drop. So overall, a pretty good mix of gains, and we'll continue to monitor all these companies closely to see how they shape in the coming quarters. Now, here is the QR through which you can access all this previous coverage. Now let's move to the summary. So the first company is Tech Wabag Ltd, where the company secured a new 2,332 crores order from Saudi Water Authority for a 300 MLD mega seawater desalination plant at Yanbu, and Tilaknagar Industries Ltd, where the company acquired Imperial Blue business division from Pernod Ricard India for euro 412.6 million, which makes around 4150 crores. So that's it for today's edition of Noisemaker. और अगर आपको ये breakdown informative लगा है तो you can scan the QR code to read the full report, and we'll be back soon with more simple and clear market updates. Until then, stay curious, stay ahead, and stay informed.